In terms of revenue, you have a slight miss on revenue, not by a lot, but a slight miss. The estimate was for $21.96 billion, came in at $21.45 billion. They did beat on the bottom line, earning $1.05 a share. The estimate was for 99 cents a share. What we're trying to hunt down right now are the automotive gross margins ex zero emission credits. We have it with zero emission credits at just over 30%, and the estimate is for it to be at 28.5%. If it's around there, it's not going to be a huge move one way or the other. But then you have operating cash flow at $3.3 billion. We're just kind of diving into the numbers right now, Scott. But the bottom line is this. You have a slight miss on revenue, but you do have a miss, or you do, have a beat in terms of earnings, with Tesla earning $1.05 in the third quarter. The estimate was for 99 cents a share. Scott, back to you.
We're all in the same car. I was going to say we're in the same boat, but we might as well use the car analogy, Phil, because it's all trickling out very slow. So I feel your pain as you're trying to get to the bottom of the numbers as much as we are. So that's why you can't go anywhere, really, because we'll get you more details on to why the stock initially looked to pop and why it had seemed to turn around. But it's moving as we speak, down about 7%. Dan Ives, of course, the star analyst of Wedbush, who covers this company. Hang on, Josh, real quick. Do you want to give me an initial reaction to at least the top and the bottom line while we get to the bottom of deliveries and the things that matter most?
Look, I think ultimately, if you look at margins, I think generally in line with where the street was hoping, a little bit of an EPS beat. I do think bulls are maybe hoping for more just in terms of maintaining margins. But the big thing, as you talked about, Scott, it's about Q4, the 50%, especially with China. That's why this is a moment of truth for Tesla, at least in the near term, to sort of navigate some of the logistical and other issues they've had. And that's why this is going to be, in my opinion, probably the biggest conference call from Musk in the last 2 years.
And you expect them fully to be on it?
Oh, yeah, we expect them to be on it. And really, I think the key variable is about the China growth to 50%, for the year. And is this a logistical issue or a demand issue? And can they maintain margins through it? That's really going to be the focus for investors.
Someone brought up within the last hour the possibility of a buyback, right, as you have Musk trying to pull some levers that he still has at his disposal, and they've already done a split, obviously, so that's not coming again. But what about that idea?
I think more and more pressure for them to do a buyback. Given the cash situation, raised a lot of capital, profitable. You're seeing more and more frustration of investors in terms of wanting to use that for at least some sort of capital allocation program. But of course, the albatross here continues to be the Twitter situation. Will Musk ultimately have to sell more stock? And that's sort of right now, I think, the ghost that's really an overhang on the stock.
You think he's going to have to sell more? Is that a foregone conclusion at this time, as we hear reports of private equity maybe bulking a little bit at the financing part of that deal?
Well, I think that's the worry. I mean, some of that could crack in terms of him needing to step up. It was in an incremental $5-10 billion. And I think that's really going to be the focus the rest of the week going into next week. Remember, by next Friday, ideally that's when Twitter closes. Does he do Form 4s? Does he sell more stock? And right now, if you look at this report, it was clearly a delivery miss, but it's all about margins in that Q4 number.